Hi everyone, welcome back to another video from Indicator Vault. Our focus in this video will be on two chart patterns that are very popular in technical analysis. When you use these patterns, you will be able to enter winning trades right away and boost your profits. The two patterns featured are the bull and bear flag patterns. Let's take a look at what is a bear flag pattern first. In trading, a bear flag pattern is a continuation pattern that signals a potential bearish move in price after a period of consolidation or minor retracement. The pattern is characterized by a sharp and sudden downward move in price called the flagpole, followed by a period of consolidation called the flag. Let's take a look at the key characteristics of a bear flag pattern. Number 1, the flagpole. The pattern starts with a sharp and sudden downward move in price, often with high volume. Next, we have the flag. After the initial move, the price consolidates in a tight range, forming a flag-like pattern. The flag is usually sloping upwards against the trend line. Lastly, the breakout. Once the price breaks out of the flag, it typically resumes the downward move, often with increased volume. Now that we have a better idea of a bearish flag formation, let's take a look at the requirements for a bull flag pattern. A bull flag pattern is a continuation pattern that signals a potential bullish move in price after a period of consolidation or a minor retracement. The key characteristics of a bull flag pattern include the flagpole. This is a sharp and sudden upward move in price, often with high volume. Next, we have our flag. After that initial move, the price consolidates in a tight range, forming a flag-like pattern. The flag is usually sloping against the current trend in the market. Lastly, we have that breakout. Once the price breaks out of the flag, it typically resumes the upward trend, often with increased volume. So remember, the pattern is characterized by a sharp and sudden upward move in price called the flagpole, followed by a period of consolidation, which is the flag. Unfortunately, there are very few indicators on the market that help traders to detect these bull and bear flag patterns, which is unfortunate for traders because trading these patterns can be very profitable. The indicators that are available use simple algorithms based on recognizing the flag patterns, which means more often than not, their signals are late or even wrong entries. That is where the bull-bear flag indicator is different. It combines pattern recognition and momentum trading strategy to confirm the strength of the trend, meaning it not only recognizes the flag patterns of the candles, but also examines the volume of the candles before the price retraces. By looking for additional confirmation signals from the increasing volume, it helps minimize the occurrence of false breakouts. Let's take a look at how it works. Our bull-bear flag indicator detects every bull-bear flag pattern formed by a flagpole and a flag. It then validates a bull-bear pattern if the price has increased volume during the period the flagpole was formed. After a flag is formed, the price reverses and crosses above the height of the flagpole. The indicator gives you a signal. What you will see is that it draws beautiful rectangles to indicate bull-bear flag patterns clearly on the chart. Bear flags are colored in red and bull flags are colored in blue. Unlike other indicators, it's also able to predict the breakout or trend continuation after price forms the specific flag pattern. One of the best parts of the indicator is also that it works on multiple time frames and instruments, meaning you can identify as many trade setups as you want. On top of all of this, it gives you a clear buy and sell signal with a stop loss and take profit in place, making it very easy to use. Overall, the indicator gives you great entries so you can enter winning trades right at the beginning and boost your profits, giving you more and bigger wins. Now that we have a better idea of why so many traders are using these continuation patterns in their trading strategies, let's learn how to use the bull bear flag patterns to increase your trading profits and grow your small account. Before we do that, I'm going to quickly ask you to drop this video a like and comment down below with the country that you are watching from. What all of this means is that we are going to build a complete trading strategy using the bull bear flag indicator and the patterns that we have learned about. To do this, we are going to add the following indicators to our chart, which is the bull bear flag indicator that we featured, a moving average convergence divergence or MACD, and an exponential moving average. The settings for the moving average are as follows. It is calculated on the period of 200 with an exponential method. The style has been set to red and the line thickness is on the second option, making it easier to view on the chart. Next, we have the specifications for our bull bear flag indicator that will be our entry signals to buy or sell in the market. Next, at the bottom of the chart, we are going to make a few adjustments to our MACD indicator. Under settings, we are going to leave everything on default. However, under style, we are going to make a few changes. For the strategy, we are focused on the histogram and change the first two colors to green and the second two colors to red. Now that we have all of the components of the strategy, let's take a look at when to enter a buy or a sell trade. Firstly, the 200 exponential moving average acts as a baseline, meaning if price is above the moving average, we are only looking for buys or long trades, and the opposite is true when price is below the moving average, as we are only looking for sell trades. Our second indicator is that the MACD must show momentum for the trade, meaning that it should be showing the same color for bullish momentum for our trade. Thirdly, our bull bear flag indicator is our entry signal, meaning it shows us when to buy or sell. Next, let's take a look at a sell example for this trading strategy. Remember, for a sell trade, price needs to be below the 200 exponential moving average or EMA. You will often see the 200 EMA works as a floating support and resistance. Next, we are waiting for our bull and bear flag indicator to identify a potential sell entry in the market. Lastly, we look at the momentum on the MACD to indicate that we have bearish momentum for our trade. You will see that we had a fantastic entry for our sell trade using this indicator and strategy, and it provides us with an automatic stop loss and take profit for the trade, which does make it super easy to use. The bull bear flag indicator works on multiple different instruments, and it also works on any time frame, meaning you can test this trading strategy on the instrument that you like trading. I hope that this indicator and strategy feature today was helpful. Until next time, happy trading! Bye.